Welcome back to Beyond the Cards, your favorite monthly podcast where your favorite payments nerds talk about all the news you want to hear most. Welcome back, everybody.
Hey there, thanks.
Hello. Hello. Happy Friday.
Well, do we have a show in store for you? Because I think her opening article has already inspired a lot of feelings. Um, from all of us, it basically seems like. Me, because I am feeling like really the only big news coming out anymore is about stablecoins. And we've seen a lot of news and a lot of discussion coming out of the US. Especially since many of these companies tend to have a US slant to them. But now we're actually seeing some commentary coming from Christine Lagarde, if I did that correctly. Let my better French speakers correct me. But on her opinions coming out on stablecoins and what that means for European central banking. So, I mean, I understand her position, right? Which is that I think the challenge that we like particularly sit in, right, with this conversation is there is an infrastructure component to stablecoins, which is the part that I think most of us are very fond of, right? We like the concept that stablecoins are expediting the movement of money, particularly cross border, by utilizing the blockchain technology that they're based off of. But the part that makes it a little head scratching, right, is that it's also stablecoins are also typically in the crypto world, and it is also basically considered an investment vehicle as well. So it puts it in the weird regulatory space of monetary policy, which I think is really what she's talking about here, which is that as these major stablecoin exchanges like Circle, like Tether, right? They're private companies operating in essentially a massive way into the major monetary systems globally, right? They're moving these operations basically out of the purview of central banks, which potentially erodes their ability to create monetary policy or manage monetary policy that could potentially impact things like interest rates, inflation, etc., because the money is essentially going out of circulation into private hands, whereas like typically fiat currency is kind of more of a public type of perspective, and generally central banks play this kind of public service role. So how did I do on my French pronunciation?
Doing well. You're doing well. We are, of course, we are talking about Christine Lagarde.
Oh, she's so much better than me. Yeah, I mean, what do you guys think? I think we were having a pretty rousing conversation on this of, especially things like the digital euro, digital dollar, like how does this, play in and especially from your guys' European perspective, right? Like you're there. What is this? What are the like attitudes towards this type of revolution?
So what I
Want to go
mentioned
first, Elena?
earlier. Sorry, go ahead.
Yeah. No, sure. Go for it.
No. It just a little thing that I mentioned a little bit earlier, because of course there is this digital euro that we are talking about, that we have been talking about for years and years. Thing is that we don't really see concretely, I mean, in practical, where it is. So in a way, being afraid of the stable coins and US stable coins especially should kind of alert also Europe to be able to issue this digital euro, to see the effect. And the thing is that I can't. We, of course, her fears can be understandable, of course, but at the same time, we don't have. I mean, this is something really theoretical, and these fears cannot. I mean, how can you see what's the impact on the digital euro and so on if it's not even issued? You see what I mean? So you should not be afraid of that right now. But uh, I think that it can, and you know that I love the things where people are afraid, because it's supposed to bring people to innovation and to concretely act in a way. So I think that we should rather act also in Europe regarding the digital euro, to have a better view of the impact of it and so on. So maybe it's maybe her fears are a little bit too early. I don't know. Of course, it's only me.
Gab?
Yeah, sure. So I think what is interesting about stablecoin is that it's, I guess, the main use case is that it's making money movement easier, faster, cheaper, and so on. So that's the main use case that we see right now. I don't think this is the only use case of actual money that can replace all the money policy and the sovereignty and things like that. I think this is, I mean, we are quite early in this process. And honestly, I don't think USDT would be replacing the way we pay with euro, like in the near future. As you know, because I receive my salary in a euro bank account. I have my services, banking services with my bank and things, so if at some point that could, the risk that we could think of is really, as Sarah was saying, theoretical. I think we could imagine American banks, for example, or even foreigner banks in general, could come from Asia, from Africa, from Latin America, wherever. And through this stable coin, USDT in particular, maybe they could propose a completely alternative banking system to the one that we currently use. Then maybe to pay the very international and multinational companies like Amazon or any social network, maybe on those companies you can have any incentive or interest to pay in USDT, in which case all this part of the commerce would go out of the euro ecosystem, and then for sure you're at risk. But it's part of, I hope, the central banks to play their role and to make sure that their money policy makes sense, that it really provides an additional value and service to their citizens and not customers. And, that you can basically fight those external risks. I'm just thinking out loud, but for sure it creates a risk, but it's not, I think it's just the consequence of the technology that we are seeing, how it evolves. Technology evolves faster and faster, and it's simply the consequence of the same trends that we've been seeing over the past decades, but now just faster thanks to technology. So is that the fault, or is that the cause of stablecoin, or is this a consequence of the fears, the lack of action of central banks? I would rather see that way. Is rather than a threat, it's more like a lack of action. from the central bank in Europe in particular.
Yeah, I kind of feel like my thoughts on this are like very Jurassic Park centric, in the sense that it's like everyone is so focused on whether something could happen that they are forgetting about whether it should happen. And I think that's kind of the concern is, you know, it's great that there's this technological advancement and innovation, right? It's great, right? But at the rate that it's moving with, I would even say that like the knowledge basis of this kind of innovation is limited. And it doesn't have a great reputation, particularly, that it makes it hard, especially to legislate or to create regulatory policy about, because it's like, all right, well, now we need to kind of go into this, to your guys's point, like an area that central banks have generally been kind of leery about wading into. And like there needs to be experts within these kind of uh stablecoin cryptocurrency spaces to be able to advise legislators or people who create laws, uh, to be able to like effectively manage it, and also be able to like extrapolate out what are the potential dangers that we are going to see here. Because, you know, in true fashion, right, like the companies getting out first and throwing a lot of weight behind it are going to be the companies that basically own the rails. And I think our next article also kind of has some more European fear contained within it, and it comes to us through Reuters, where like Amundi, who is, you know, one of the largest asset managers in Europe, is also calling out some pretty major concerns. And the thing that like particularly stood out to me in this, right, as we're, you know, talking about stablecoins as this massive, you know, global innovation, but that 98% of all stablecoins, according to them, are pegged to the US dollar. But 80% of all transactions using stablecoins occur outside of the US. And I think that that's like very, very interesting to me, right? Like that's really the dollarization of stablecoin, right? So like no one picked the euro. Like I don't wonder what the remaining 2% is. It's like, is it euro or is it some other currency? They don't particularly say, but that dollarization uh, poses both benefits and clearly like major risks. Like, you know, the Genius Act, you know, stable coins will basically trigger, you know, the buying of US Treasury bonds, which is like important for our economy. But like it's not without risks. So while your bestie Christine may be concerned, also seems like some of these asset managers and some other major, you know, finance ministers or central bank authorities are also a little bit worried as well.
Right. And to your point a little bit, like it does seem like everybody is jumping the gun without really thinking about some of the long-term future consequences, risk, and everything. But I guess how I look at it is, what does that look like for merchants, especially when it comes to these settlements? What does that
Way to
typically look like? Go ahead.
way to bring it back to the merchant perspective.
I mean, I think at the end of the day, it benefits not only, the banking and the consumers, but what does it look like for merchants? Everyone is talking about this, but no one is really talking about what it looks like for merchants that are going to start processing these stable coins, or how it's going to affect their funding or their costs or anything like that. So it's like everyone is really like, oh, okay, backing these stable coins without really looking a little bit deeper on who could
Yeah,
it affect, how could it affect, and what's the benefit, what's not the benefit, and everything like that. I just feel like everybody is jumping the gun to get a stable coin.
yeah. And I mean, I think we talked about that on the last pod, which is like, okay, but at some point, like, there does need to be like a global leader. Like, you can't have 15 different stable coins floating around, because then it's like, okay, well, now we have to support all these different blockchains. Now, and it may depend on like whether they're backed on a particular blockchain technology like Tether. Like, if they're stable coins that are based off of Tether, maybe that makes things a little bit easier. But I think from the merchant perspective, right, is that like these companies are not technically banks, right? They're not banks. They are acting bank like, but I have concerns about anybody acting in the banking space that are not actual regulated banks. And I still just don't see this whole like quasi banking nature to stable coins as giving me warm and fuzzy feelings until they're essentially regulated like banks. Because from a merchant perspective, in my mind, it's like, yeah, you're transacting in these stable coins, and it's allowed you to broaden your company's horizons to being more international, because you're no longer worried about these insanely high, foreign exchange fees, or, the legacy network scheme fees, etc., and you're getting your money faster. But it opens you to a lot of risk of, is any of that money alleged money, as Christine Lagarde would say? She says alleged money, uh, which like made me laugh. um, is it legit money, right? And your average person has, as we have learned, a really hard time distinguishing bank-like companies from actual banks, because a lot of these companies really advertise themselves as being banks or better than banks, but lack banking charters.
Yeah, you're right. We have to I think that it's a good point, because you have to remind that those companies are private companies. They are not supposed to serve in a way the citizens of a government, so us as citizens, but rather, their accountability is rather on shareholders, for instance. So that's the reason why, in a way, you can't see them. Of course, the risk is not the same as a traditional bank, in a way. Also regarding everything. Regarding compliance and so on, so it's not the same at all. We don't serve the same thing. We don't have the same objective also. So tomorrow, a merchant, no matter whether it's a merchant or a citizen, shall of course rely on a bank and also on those companies, in a way. I mean, it's if you want a portfolio to grow, you have to play with diversification. I don't know whether it's the appropriate term, but you have to make your
Ouais.
portfolio diverse. So So and you can play with both. I mean, the fears that I mean, you can't see the ecosystem with either privatized those private companies or banks. You see what I mean? So you can try to find the right balance between them also.
Mm, mm.
I know they're projecting this insane, significant growth, right? The numbers are massive. But just while we're all talking, why do they think all of these consumers are going to move to stablecoin? I mean, why would we do that? Why would you use that card? Or not that card, excuse me. Why would you use that form of payment? What's the real, just so you have a faster payment? I mean, you're not being rewarded like the drivers behind consumers adopting more and more rewards cards, right? There's a benefit. So I'm just curious what the massive push will be, or is it just to more of like a different demographic and unbanked population?
I think that's a stellar point, honestly. Like, where are you getting these growth projections?
Right.
And
Just trying to find
like,
the number, but it's massive in
Because
this
yeah,
article.
realistically, how many people use crypto today? I mean, there is a lot of
I mean,
people that
I
use
don't.
it. I mean, I don't. And so it's like, if a lot of people don't use crypto currently today or anything like that, why would we revert to doing stable coins if
Right. That's kind of what I
current
just
payment
don't fully understand.
those ones that are already out there are not being used? What is so significant to move to stablecoin?
Because I think that first of all, also we have to be aware that we are living in kind of we are facing multiple crises. You see what I mean? So and in crisis, no matter whether everything is also need to to politics also regarding government and so on. So in a country where where the currency is not it does not enable people to strive and uh, to uh, to live properly, those kind of, no matter whether it's cryptocurrency or stablecoin or anything, can be can be in a way can be a way also to uh, to 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 pursue the business also with this kind of currency decreasing. I don't know how to say that, but in a way, as we are facing also a lot of crisis and so on, we see that those kind of currency, I mean, digital currencies also can have can be more powerful. It makes you being it makes you be independent from the currency, from your local currency.
yeah. I mean, well, like, especially what this points out is like, one of the challenges of getting access to US dollars is a bank account. And this kind of stable coin, which again is like clearly, totally, overwhelmingly pegged to the US dollar, um, is giving people access to US dollars, which, is readily tradable around the globe. Like, I'm pretty sure we tried to architect it that way. Is going to be attractive to like what you said. If you're in a struggling economy and you want access to dollars because that gives you a lot of power, just even within your own country, well, you're going to be able to get access to US dollars without needing that bank account. I mean,
Maybe, sorry.
this one guy from Italy, this Giancarlo Giorgietti, I mean, says that the stablecoin policies presented were more dangerous to European stability than the trade wars that are currently going on. So, I mean, there's clearly like a lot of worry that these US companies and this dollarization presents like both positives to a lot of different people, but also like pretty serious and concerning negatives that I just don't think we have a really great way of assessing. And, to Chelsea's point with like why would anyone be doing this, right? Like in a reward centric economy like the US, why would you be switching payment methods to non-reward centric things? And I think part of the reason why and part of the confusion is like people are just really having a hard time differentiating, is this money, is this an investment, or is this infrastructure? And I think the challenging thing with like crypto and stablecoins is like, isn't it all of them? Like I'm pretty sure it's everything. And I feel like that's why it's also just a hard conversation to have, because it's like, well, what is it? You need to like, hey, stable coins, you're cool and everything, but you need to pick a lane.
At the end of the day, you have also central banks that lose tools to control the inflation with this kind of money also. And so it, in a way, it enable also the flight in emerging markets, which is at the end of the day more interesting, but not really interesting for central banks, for instance. So
Well, it's all fun and games until like, yeah, inflation hits or interest rates get out of control. And then we're like, oh, wait, what did we do? I can't buy a house now because the interest rate is 24% because we privatized all of this currency, and it's out of the control of a central bank. And so now like what do we do? Right? Do we go beg the private company that's not a bank to, loosen the regulatory or like loosen the monetary policy? Like it just gets very, very confusing. And I think this is ultimately what their major concerns are, which is like, yeah, it's fun and everything until like that potato is €4 instead of being, a couple cents. Well, considering we can't seem to stop talking about stablecoins, let's talk about something that actually like is good, but kind of annoys me at the same time, which is the expansion of the range of NFT technology. Which, I think we've all been there. Like you go and you try to tap your phone on a terminal and it's like, where is the sensor? I look like an idiot smacking my phone around this device trying to get it to payment.
Yep, completely.
It's like I really wish terminal manufacturers just put like a little X marks the spot of being like, touch me here.
I think
But at
the
the
devices that are the most useful are where it has like the little pad on the left with like the image, and you just hold it there. Your card, your phone, whatever.
yeah,
I don't know what made devices.
well,
Sorry.
here's my issue, right? Is I like the idea in theory, but that also means that there's like certain pieces of technology that maybe are integrated. So like I'm thinking of standalone kiosks, particularly unattended retail, where two things are too close to each other. And I'll give you a personal example. So I was at the movie theater trying to claim tickets that I had purchased online, and it was like, hey, scan the QR code that's presented on your phone to call your tickets up and print them. Well, the problem was that scanner was too close to the payment terminal. So every time I went to go try to scan the QR code, it kept trying to like call the NFC chip and authorize my card because it was just too close. And so it kept like trying to call my wallet because for whatever reason, like the terminal kept waking up. And I was like, okay. Like this range issue is a problem because your scanner that you're trying to have for the QR code is like literally right next to the terminal. And so it's kind of this question of like, yeah, it'd be great to like have a little bit better range on NFC, like especially for a lot of these standalone terminals, but like watch out because if anything else is integrated or too close to the scanner, like is it just going to keep trying to ping your wallet every single time?
Hmm.
And this also begs the question of like, am I just the person who's doing it wrong? Like,
I was
am
wondering
I
that.
the idiot?
Is there any risk if
Yeah,
you
I was just about to
extend
say
the
that,
range?
couldn't that cause a lot of increase in risk though? What if because they're trying to widen the range, right? So where you just wave it. Woohoo. Like if I'm inside my car through a drive-through, instead of me extending my arm, are they trying to say like I can just do it like just wave it across or whatever?
Well, so the range is potentially being expanded by up to like a 4 multiplier, which would be
Mhm.
8 centimeters or approximately 3-ish inches. So it's not like it's going to like a foot or like 24 centimeters. So like I don't think it's so expanded, but like I've been going to my local grocery store and I don't know what they got in that sucker, but like I am like 5 inches away and it's like, boop, got it. And I'm like, okay.
I know
Um,
sometimes you don't give me time to pull up the right card. It'll just I'm like, wait, that's not the card I wanted to use.
I know, because it like it's just gonna go with the default card at the top of the wallet, and it's like, ooh.
Mhm.
And so like maybe like it's one of those things where it's like it's good, but also just weird at the same time of being like, do you then need to have a little note on the bottom of the terminal that's like, have the card you want to use at the top of your wallet? Because if you approach me, I'm gonna grab it.
So maybe there is something to improve in terms of how to manage those those softwares or middlewares and so on, to be able to handle that, to be able to recognize that there is a card, but there is also another, and to select one of them depending on which parameter. Maybe those parameters will have to evolve also, but at the same time, what I see as a real innovation is the ability with a single tap to have multiple purposes in a way met. Also, you will be able to pay, but also to access to, for example, a loyalty card at the same time, so that it can be taken into consideration in a single tap. So everything, I think that we still have to improve those the way to kind of read the cards and so on. In addition to this ability to increase the range, the range. So there are still things to do in a way.
That then getting to your first, I agree with you, Shira. Getting to your point that you're not the only idiot that lives in the world, because I am too. It happened to me when taking a train recently, and I was struggling. I didn't want my card to be read, and I wanted to scan my QR code. And I thought, why don't I have a button So are we reinventing the button so that I can select something? There is so much contactless that it becomes useless. I want contacts.
Oh,
I
I
want to
know.
select what I'm doing. I want to pay or I want to scan,
Oh, yeah.
Maybe
yeah.
we'll have
Don't
to
worry.
use an AI, for instance, to be able to
Don't
rate the
start. Don't
proper.
you dare. Don't you dare start with
No, but
that.
yes, I'm saying. I mean, it's a logical kind of continuation.
Well, also like my business card is a contactless NFC card. So sometimes I will like, if I'm at a conference or something and I'm wearing like a blazer or suit jacket, I have, my wallet in my upper coat pocket, but I'll put my phone in there. And because of the range, it's right next to it. And then I'll like go and check my phone and it'll have tried to add my own contact information like 20 times. And I'll like feel it keep buzzing. I'm like, oh gosh, I've got to keep these things separate. So I'm like, uh-oh, like, does that also mean that like, not even just from a payment terminal perspective, like what if people's phones are too close to each other and they're like, oh, hello, I'm trying to share something with you. It just cracked me up. Because I was like, well, this is good, but like also, I've ran into a lot of weird situations with this.
Yeah, I think that a lot of things will have to evolve also in the readiness, NFC readiness, and so on, to be able. I mean, a lot of things have to be updated in a way to be able to manage those kind of high traffic zones and crowded zones and so on. So
Yeah. Maybe that's where your AI is gonna come into
yeah, that's
play. It'll be the terminals will have to have an algorithm to judge whether someone's actually trying to interact with it or not, or if it's just somebody like passing by. Well, that was fun. So let's talk about our good friends up north and bringing back the conversation of open banking. And I like it. I'm obviously like a huge fan of like open banking. I think it's pull off the red tape and show me those APIs. But Canada has kind of like stalled in its advancement of like true open banking, and I think we should make a distinction. There is open banking like services that we have in the United States where it's like these companies have individually worked with these banks to be able to support them. They have like private agreements with those banks. But then there's like Europe, where there is a true open banking mandate where like third parties can access those bank APIs and create and innovate products off of. And so it seems like there is a push in Canada to really bring back the efforts towards true open banking, not open banking like services. And I think Canada has a really good shot at this because, Canada doesn't have like there's something like 8,000 or 10,000 like individual banks in the United States. So that's just makes everything banking related here very complicated. But there's not that many banks in Canada. We love to see it.
I guess Canada is one of the best examples of a strong local network, a debit network, right?
Oh, yeah.
So, I mean, this is following the trend. I think that would make sense that Canada is really on top of open banking, following this successful experience.
Well, are they on top of it? I think they're kind of behind it. I mean,
Yeah.
obviously,
I mean,
Europe.
You're right. They're currently behind it, but they could easily maybe get back on track. because it's a relatively small country. They have this experience.
It's a big country with not a lot of people in it.
I know. Small country in terms of users. Small country in terms of users. Right.
Yeah, and their population base is very used to like EFT, electronic funds transfer. Like they're big on the like account to account payments. Obviously they're you were referencing Interac, their regional debit system, which is, controlled by the government. So there's a lot of people who are really used to operating within that space. And so it should be a short hop for them. They will just have to overcome obviously the technological aspects, and that obviously requires companies who want to act as those intermediaries and potentially innovate those products. Because it doesn't really help you if it's just like one bank doing it. You kind of really do need these third-party services. Like when I think of like, if I think open banking and I think Europe, I think of the company TrueLayer. Like they're just the one that comes to my mind as being like the at the forefront of it. And then when I think of like, open banking like in the US, I think of Trustly. So I'd be interested to see, is it like one of those companies kind of jumps into the Canadian market, or will it be a domestic Canadian company that kind of emerges and acts as the intermediary within that particular market?
Well, at least they'll learn from other people's mistakes. So with the reopening, it would be like a more smoother process.
Yeah, that's obviously very true. And what's like also really interesting to me in the conversation of open banking is like there always seems to be a lot of people very interested in it. It's always a super hot topic. And then you actually like, from our experience, we get to trying to like look at open banking as a payment and offering it through like from a merchant perspective. And then it just seems to fall off a cliff of being like, oh yeah, that sounds great, but I'm not going to implement it.
Things that they also come after UK, Australia, Europe also. So in a way, I think also that they will, I hope they will learn from what happened also in those other countries. And for instance, if I may, I think that what you mentioned earlier regarding their habits to account to account, user experiences and so on. I think that in terms of performance, they will probably do better, even if there are more and more banks than in France, for instance. But I think that they can only that I mean that they can only perform and have greater and better better performance rates also, because we are having this issue of performance also of open banking solutions also when it comes to payment in Europe, and from one country to another it's not the same thing, and also from one bank to another it's not the same thing. So I am very curious to see what will be the result of how it will turn in terms of performance. But I think that I'm pretty sure I'm pretty optimistic about that.
Until Stablecoins comes and crushes it. Because they are kind of like almost two competing technologies, if you think about it.
I like that idea then. I've never thought about it, to be honest. But yeah, stablecoin is like opening the money and the currency system, as open banking is doing on financial data and payment initiation. So yeah, quite
Look,
similar concept if you think it this way.
one thing I was looking at is the differences in terms of what Canada's suggesting versus our US approach. And I think they're really taking a consumer protection or privacy. They're taking a lot of that into consideration as they roll it out, it sounds like, versus the US is more market driven, and there's obviously not as many protection, security. There's not an overarching like rules and regulatories as
Well,
it sounds
banks are
like.
people too. In the US, banks are
Exactly.
humans.
Yeah. I mean,
Um,
exactly. There's just a lot of differences between what they're suggesting they're going to have in Canada for the rights and the security components versus US.
I don't have the article at my fingertips right now, but I'm pretty sure I also just recently saw that JP Morgan was gonna charge for that data access, which, you know, to have that kind of pipe opened up, but also monetized, right? That sets the bar really high for disruptors within the space. So, you know, that's probably going to mean that you have to have a very strong, viable product, do a whole bunch of rounds of like seed funding to be able to even access the data and have it, you know, flowing in, because you're going to have to pay for the data first, and then you're going to have to get paid users on to be able to, you know, monetize. And that kind of it's an aggressive shot, I think, because then that kind of raises the overall cost of operating within the system. And then it's like, okay, well, what if everyone is going to start monetizing their pipelines in the US, well, then it's like, okay, well, now is it, instead of being, you know, a handful of cents to do an open banking transaction, does it reach up to $1 or, you know, $1.50, because these companies have to cover their costs and they obviously have to make money. You know, it just is a pretty significant roadblock. And again, I don't have the particular story at my fingertips, but I feel like I saw it. Well, speaking of people who monetize and keep a close hold of their own networks, we're looking at antitrust and Visa MasterCard again. So Europe, what are you doing? What are you doing to our friends Visa and MasterCard, the people in St. Louis, Missouri, and San Francisco? Why are you always coming for them?
Yeah, good question. It seems like Europe is playing Trump with Visa and MasterCard. I must admit, I don't know, but I guess, you know, makes me this article makes me think that there are a lot of discussions about the PSD3, so the new payment directive on you know, regulating all the payment related topics, trying to fix most of the problems that were created by the previous version and those that were not handled that time. So I don't know, that could be just a way to put some pressure, if they can, if Europe can put any pressure on Visa, MasterCard, so that they can better negotiate, maybe to negotiate interchange rates. You know, because if you look at the article at the end, what is Europe really asking? What is the regulator asking? Is like trying to mediate a little bit between merchants and Visa Mastercard, and at the end, it's sort of the conclusion seems to me like, okay, retailers or merchants, what you want to have is some details on scheme fees, which ultimately is fine. So on the one hand, I see that as making a lot of noise probably to negotiate something going forward. And on the other side is like they're not really asking for anything that would have a real impact on Visa Mastercard. They have data. They could agree to give you some additional transparency, I guess, with no additional cost for them, no risk or anything, So yeah, I don't know. I know that the UK, I think was previous podcast, that the UK is also trying to fight against the commercial interchange because it's much higher than the consumer one, just because it's not regulated, which at the same time seems to be like fair. You don't regulate something, it's free market. You said what you like. But yeah, I guess, the reality, the truth behind that is that it's true that we don't have in Europe, there is no visibility, transparency at all when it comes to scheme fees. You just receive a portion, a certain amount of fees, and then certain lines, but you cannot really reconcile what you're paying for. And this is a pain point, which,
totally boggles my mind. It's always so like boggling to me that like the country of GDPR, privacy, transparent, but like also transparency in certain spaces, like does not have clear scheme fee reporting. Like this is where I do think basically what they're asking for is, in my personal opinion, to be a little bit more like the US, where we have published scheme fees, right? Like you can go up and look on their websites and see exactly what the published rate is from the networks, why it gets charged, when it gets charged, and you typically see it detailed very clearly on a merchant statement, so you can see exactly all of the scheme, and you can then fact check to make sure, like, is my acquirer actually charging me a pass-through scheme fee or not. I feel like you get to Europe and you're like, I don't know, maybe seems in the realm of where that scheme fee should be, but I can't actually tell you what it's particularly made of because it's not, you can't look at that per se, and you don't typically ever see it detailed particularly well in the reporting. And I think if there was some sort of scheme standardization within the acquirer billing, right, the bills that Visa and MasterCard send to their acquiring participants, right, if that was clearly detailed and structured, then in theory, those acquirers should be able to then parrot back to merchants clearly defined scheme fees for specific actions. Which, to your point, is like, isn't that just what they're asking for? Well, we'll have to wait and find out. I'm sure something will come of it, but I personally would love detailed scheme fee reporting in Europe, and I would, if I knew it was there, I would pressure every single acquirer to be like, hey, can I get that on that statement? And can you actually, I don't know, like, issue me a statement monthly?
I think that would be fabulous.
Yeah.
That's a good question.
I mean, I know.
We'll
what
see
is
how they
funny?
respond. I don't know. They're very good at vaguely say that.
Oh, sorry, Seth.
Sorry,
I think what is funny here is that let's consider best case scenario next year, 2026. Those rates are public. Good luck with getting your reporting from the banks in the next 3 to 5 years.
Because that would require them to actually have to make them and in a usable format. Yeah.
Yeah, but that could be where, like, obviously legislators could, and I'm wondering if, like, again, this is where, like, you need regulators with expertise in this specific area. Call us. We're happy to give you our viewpoints. If Visa and MasterCard mandate, right, that this level of transparency has to be passed down to the merchants, like, then I could see it maybe coming across faster. But to your point, Gab, right? Like, they would probably say, like, hey, you need to make this reporting available by the end of 2026. And then all of the acquiring banks and acquirers would push back and be like, no, we can't make that change in that time. We're going to need to extend that deadline to 2030. Because that will take a significant amount of development resources and reconfiguring of our billing platforms, and we can't meet that deadline. Then it becomes a fight between those two. I guess we'll just have to watch, which you all know as our lovely audience who hopefully has kindly liked, subscribed, and shared this content with your friends. Stay tuned because we'll be watching for it, and if we start to see it, we'll be the first to let you know. I think that's it, you guys. Thanks for watching.
Thank you.
Bye.
Bye.
Thank you, babe.